Fundraising is always hard. It's highly competitive, and it's never easy to secure that next commitment from a client. You clearly see that in times of risk off, that the willingness of investors to pursue a smaller fund, an emerging manager, or what have you, is clearly less likely. And so consequently, it does drive capital concentration toward the more branded names out there, the more institutional platforms. So consequently, you're going to see that dynamic. And I would expect that will begin to wane as the markets begin to settle out here in the back half of this year post-election and into next year. Clearly, the larger managers, Soros Capital included, has a multi-strategy approach to private assets in particular. And within private equity, we're one platform with many strategies within our platform. And I think the key thing here is that there are several types of firms out there that are pursuing multi-manager. You have the large global asset managers like a Soros Capital that has a large traditional business that sees the growth opportunity within private markets and clearly is making a very strong strategic commitment to that segment and making a huge investment to succeed there. And that's borne out with great success over the years. You have the private equity manager who's grown successfully and established a national global brand saying, hey, let's leverage this brand for other strategies. And you see them adding strategies, typically direct investment oriented, but also coming into the markets of a BlackRock or ourselves and trying to do things like secondaries and what have you, but looking to expand that brand into other strategies. And that's not going to stop. We mentioned in our first question the growth of private wealth. And I think, unfortunately, the growth in private wealth doesn't bode well for the smaller manager, to be honest with you. Regulation, scale, the size that you need to have to get on a platform to get access to capital really doesn't bode well to the smaller manager. And I think that's going to unfortunately play out both in good times and in bad times, because there's a real institutional barrier out there with many advisors to take on a smaller fund, just given the risk reward for their platform, because they don't have the resources to conduct a due diligence like a large endowment might be able to do, and so on and so forth. So I think the proliferation of multi-managers is going to continue. The concentration, particularly in private wealth, will definitely accentuate itself in the coming years. But that all said, there's plenty of opportunity. It's a very big, diverse marketplace out there for emerging managers to come out, innovate, be aggressive, and apply their skills to a specific strategy and generate unique return profiles. Those investors able to capitalize on that.